Welcome, friends, traders, and investors, to another episode of Trading System Lab. I want to show you something. This is the QQQ from the beginning of 2025. And we all know the market has gone down. How far down was the market? I just use this gain ruler, pick it, and then go over here. And then you can see, yes, it's down 12.1%. in just a couple of days, maybe in about 3 weeks, which is actually minus 90% annual percent return if that would continue like this. Anyway, so this is down 12%. So what do we do? Yeah, I show you a strategy. Let's just quickly do a strategy, okay? Really good strategy, I think. So we go here and say new strategy by building block. Let's say buy at market, which is easy. And then I say if the indicator crosses a value indicator. I stick with the RSI. I change it to 5. Okay. And then I say crosses under, and then I say 30. That's it. And then I say that do the same thing. I use the same RSI and I use the period of 5. I haven't done any optimization. I say if it crosses over, and I say 50. I want it on a small rebound, basically. So that's the strategy. What am I using? I'm testing it on a portfolio of ETFs, not on stocks, because stocks are volatile. ETFs are less volatile. I have 3 ETFs here, which is the DIA, the QQQ, and the SPY. So 3 major ETFs with the major indices behind it. I use daily data. I want to use from the start testing from 2000. I set that here, and I use the SPY as my benchmark. It's always good to have a benchmark. And we invest in each and every ETF 33% from our equity curve. So that's it. I run it. Here we go. Oh, it's already there. That was fast. Here's the equity curve. You see the equity curve. Black is SPY, which is coming up. It has some drawdowns. It had a huge drawdown, as you can see here. But it actually was definitely having a run up lately. But the equity curve of a simple strategy is going all the way up. And it's even going up now. So let's take a look. Let's take a look at the drawdown. Here we can see black is the drawdown of the SPY, which was in the beginning of 2000 to down close to 50%. You think that's it. It just made new highs and then went down even more, 56%. It took a long time. Here you can see how long it took the SPY to come back up again. 1,800 trading days in the early 2000s. And from 2008 onwards, it was about 1,400 trading days. The green one shows you the strategy. And the strategy had the longest drawdown down here in the beginning of around 2020. That was about 700 to 800 days. A lot of traders would give up and say, oh, this is the longest we ever had and all this. And it actually had a huge drawdown here. Let's zoom in a little bit and we can see this is the drawdown of the strategy, which is close to 28%, whereas the market was down 34%. So that gets you worried. Let's take a look. Oh, we looked at the equity curve. We are up here. So what was the drawdown at the end? Let's push it over. Let's look at the drawdown. We can see the drawdown is here close to 5.5%. Here, that's the system. The equity, if you would have bought the SPY, it's down around 8%. That is the difference. You can see all the positions here, open positions, just open them. And you can basically see the open positions when you entered them on this one, beginning of March, this one, these 2 at the end of February. So you're still holding them. It took a little bit of time, but I'm just showing you a simple strategy, which just brings you in and out. And I think this strategy is really doing good. Monthly results, here's the comparison. You can see it was basically profitable. Even in 2008, when the market was down, the SPY 38% in this year, the strategy was up 2%. Here it was up 14%, up again. Here it had 3 years. That was the long flat period. It was actually down a bit. The market was only going up and was making some profits. So you might think, oh, this one was much better. But if you look at the equity curve, it's not better. So here's a drawdown. In 2020, the benchmark, the SPY is down 20%. The strategy is up 5%. And that is important. This year, it's down 2.3%, and the benchmark is down 4.35%. So that's an interesting thing. Of course, we have periodic returns. We can actually look at the monthly, and we can group them and see what is a good month ahead. And here you can see February is actually the worst month for this strategy. Yeah, could be, right? And so you get all kinds of ideas here with this strategy. I just wanted to show you that, and it's easy to trade. Let's quickly, here's the backtest results. Let's take a look. We have an APR of 6.24% since the year 2000, so we're slightly above it. We have a very little exposure of only 20%, which then leads to an exposure adjusted return of 30%, because we're only 20% of the time in the market investor. Let's take a look at the other numbers. We have 714 trades. Out of these 714, 518 were profitable. That makes it 72%. And yeah, and the average profit, that's a little bit further. Here we can see again the maximum drawdown in percentage. We also see when it happened. So this one was the strategy was in 2020, March 2020, largest drawdown. And here there's the percent drawdown it was 2020. And the largest drawdown of the benchmark, the SPY, was in 2009 with 56%. One more thing I wanted to check is average profit per trade is 0.69. So around that, 0.7%. Each trade in average makes 0.7%. You can see this is a really interesting strategy. Simple to trade, but it is definitely good. If you want to know how you can improve this strategy, please register below, and I sent you some more information about that. It's in the text below. I sent you a link, and then you can register for more information if you want to. Okay, thanks for watching, and talk to you soon. Bye.